Lydia, what a great day to have you. I just made you the presenter. Hi, my friend.
Hey, Dale. Good morning.
Hey, what a great day to have you, Lydia. There's some energy in cable today. So what perfect timing to have you here. You know, everyone calls you the cable queen. Do you like that title?
I appreciate it. I've always thought he made that title.
It's great to have you here, my friend. So, you know, we're interested in your views on a lot of the crosses in here. You could start wherever you want. There hasn't been an interview I've done with you that I haven't learned something or that you have not pointed my eye in a direction of a pair that I could take advantage of.
Thank you so much.
Okay, so we're going to start here with EG.
Yes, let's start with the euro. Steve mentioned tomorrow's a big day, and the euro really, let's start at a smaller time frame, has really been range bound between 88.50 and 90.50. And I have this fib on here. This is back from 2 or 3 weeks ago, trying to catch an entry, watching this thing just kind of oscillate. It's definitely range bound. I actually, for this week, expected that we would fall back into 88.50 more definitively like we did 2 weeks ago. And this is really our deciding line. I mean, it's really 88.50 to the downside, or it's 90.50 to the upside. And until we can break below either of these, it's even hard to catch the range, right? Because we're getting lower highs and we're getting lower lows. And it's difficult to catch direction.
Starting to compress a little bit.
Huh?
Compress a little bit.
Yeah, and it's coiling, right? So
yeah.
We're definitely getting ready for a breakout. And the question is, which one is going to have the power behind it? Is it going to be the euro or is it going to be the pound?
Do you have a bias?
My bias right now actually is I don't have a bias. I'm very
okay.
I came into the week thinking that we were going to the downside further.
Yeah.
And to see the reaction right now in the euro pound with the surprise in the GDP this morning, kind of inline expectations with the CPI last week, but CPI is at 3%. So for us not to be lower, I'm really surprised. And I mean, a lot of that has to do with just the strength in the euro. The euro has just been, it's been holding pretty steady. When we see the euro rally against the pound or the yen, we've seen the euro dollar not really advancing at all because it's contending with euro strength. It's probably been one of the few pairs that are holding up against the dollar, but it's not really making headway. You know, we're you know, we're not above 118, we're not below 116. It's the same with the pound. We're not above 90.50, we're not below 88.50. So there's still, clearly the market is waiting for tomorrow.
Right.
And what Draghi brings to the table. So for the euro pound, I just tell people like these lines are my lines in the sand, and we're trading a breakout and a retest of the level when this thing finally does break out. Okay,
so your style would be, we take out the range one side or the other. You don't go with the initial move outside of the range. You let it do its thing and then wait for retest of the range.
Right. And so that retest, that breakout too, it doesn't have to break out typically, especially with, I don't know, the Forex markets are just not as volatile as they were 5-10 years ago. But usually when we get these breaks, it'll be a little tentative. I mean, it might be a nice definitive break, and we'll see it in the euro pound. And yes, exactly, a retest of the level in whichever direction, and then that's when I'd like to get in.
Okay.
And we can see that with the euro pound. I'm sorry, the pound dollar today. Yeah, exactly. So I drew these top of the week, Sunday, Monday. I drew this range. We have been range bound in the pound dollar as well for like 2 weeks, and we've been, and it's very loose range, because you see we've had these moments where we've popped above, and we've had these moments last week where we popped below. But tentatively, it's just been 32.30 and 31.30, this 100 pip range. even though we broke below it yesterday. I thought it was a retest. You can see some of these candles popping above 130, popping around 130, and then today's CPI news, GDP news, excuse me, took it higher. It retested. So before I got on with you, I'm watching it, it retested it, and we won't see it in the 4-hour chart. Let's see if I take it down. See, we'll see it a little bit in the 1 hour. It retested not quite until 32.30, but 32.40, I took it, and I expect this will continue to rally.
Yeah, I want to ask you something, you know, because we keep bringing up retests in this interview today, like that last chart you had up, Lydia. I think, in my opinion, it's almost more demonstrating more strength when it doesn't accommodate people to come back right to that range and couldn't get there. Because people were waiting for that number, and now they're not going to get it. And if they do, they better be careful. What do you think?
Yeah, exactly. Now people will chase, and that chasing phenomenon is going to make this thing move higher, especially if we see it, like accelerate through the morning. We'll see this thing.
Yeah, so you don't have to be perfect on these breakout levels. You know, if it's like within 10, 15 pips of it is good enough, isn't it?
Right. We just want to see a retest. We want to see an attempt to come back into the level. Obviously, a at or, you know, even below, but we don't want to see it below. Actually, we want to see it come to the level and really stay above it and start to move higher. So yeah, you're right. It won't ever, it's not always going to be right to the pip, right? This is trading, so it's never going to be the exact level, but we want to see this pullback, and we want to see a hold, and we want to see it go. Yeah,
you know, I think they're more powerful when signals when the market doesn't accommodate people in a classical sense.
I agree. I agree, and we'll see that with, let's say, let's go to the pound kiwi then, since you're saying that. This kiwi has been obviously, we know the kiwi has been weak for about 2 weeks now since their election results had come in. Even when the pound has been weak against the other crosses, the pound kiwi has not managed to fall back in line with the other ones. Just really quickly, we'll see. This is it's not straight. This one's almost straight up. You see that the pound Aussie has been down last week, whereas kiwi went up. So this pair has been doing its own thing. And just to your point, Dale, so I drew this. I drew this fib first on this breakout last week, and we never came back. We never came into the fibs at all. And I think those are another powerful indicator of trend and the power of the trend when it can't even do, when we can only attempt or manage a shallow correction.
Yeah, just sideways. It's kind of like, markets that work off overbought in time rather than price are telling you they're a freight train.
Yeah, and this was the first one, is when we broke above 87. And 87 actually had been a previous high. You can see the highs here. So that was our retest. If I can just draw it really quickly, these highs, that was our retest. So we broke above it and we came back lower.
Right.
And this is where we needed to get in. So if you didn't get in, I think this was last week at 87, you needed to get in again. It never retraced, so you draw it further, it still never retraced again. This one was a little harder to catch. You needed to draw, not this fib, but the retests are great, right? But after that, you needed to have drawn this fib, and you would have gotten a very 38.2 retracement. That was your area to get in at the start of this week, and now the start of the week was actually above 90, so this was
a huge mover. Huge mover.
Pound kiwi is very volatile, so when you catch this one in the right direction, it's very profitable.
Lucrative.
Yeah. So this one, I just feel the pound kiwi is clearly telling us that it's going higher. I do think that the New Zealand dollar weakness is a bit overdone, but you can't stand in the way of this weakness right now. We've broken now above 89.68, former high back when the pound was really rallying in May.
Yeah.
And even though we're in this retracement we're still in this fib on the larger time frame. I do think we have a clear shot to head towards 2. And we have the 61.8 at 1.98 coming up, but we basically have cleared resistance. And let's see, the former lows back in 2015, since breaking below that, that's actually.
You know what? Blake must have seen your chart, because you know, you got to watch that Blake Morrow guy, you know, because he has a 198 target as well. So, great minds think alike. So anyway,
Yes.
that's confirmation to me that that number's going to manifest someday.
Yeah, that's a big number. I have it on the fib at 198.50. So I think we're clear to go on that. We're basically bumping up against these former lows from, this is 2015. So probably this is our first kind of retest of these former lows since breaking down last year. So this will be a big time area. I don't really have a doubt that we're going to clear these 197 levels. Like, I'm sorry, 192.70. So I don't think that it'll be a problem to clear these levels if we just zoom in now with this kind of line marked.
That was a great telescopic look on the weekly. That was really a clean, that formation measures it too. So you have fibs at those levels. If you measure the whole width of that weekly formation you had, it's an ascending triangle. That's about what it measures. It's about. So that's really nice look.
Yeah. And we're finally clearing the top. And so let's see if we have a retest. Let's see. So this was the former top. This was the former top of that triangle you're mentioning. Everyone see the blue line here. That's 89.62.
Okay.
Come back in. So we had a retest all week, bouncing above 190. So we never got below that really. A couple stabs below. That's where you wanted to get long. If you noticed that retest, if you were hesitant like I was. We have a retest now coming in at that 192.44 level. Those are the former lows from 2015. So slight break above those, hit the my 123 extension. And now if we have this retest, can look for a retest around 92.40. And that would be the opportunity we'd be looking for to go long. Okay. You can also, if you're more, I wouldn't say diligent, but if you're more conservative, like I can be, especially with the pound kiwi, knowing how it can move, even on a correction, you can draw these fibs on today's move, and a nice correction would take us into 192, 191.79. So those are your areas for trying to catch this trend. I don't think it's the end. I mean, we're healthily in the middle though. You know, we're a couple weeks into this trend. But yeah, if your opportunities to dip, watch what it's doing today around 92.40. If it breaks below and it keeps on headed, I think you'll want to take your opportunity a little bit closer to the fib level.
Thank you, Liv.
Mm-hmm. And your stops should definitely be below 191. So you got to give this one some room. Got to give this one a little bit of room.
Let your trades breathe, right, Lydia?
Yeah. Oh yeah. I mean,
so you know, if you have to use wider stops, you just go small.
Exactly, or you need a new entry, right? Like maybe if your stop is too wide for your position, then you need to move your entry some. That's how I take a look at that.
Yeah.
So yeah, everyone should always be reviewing your risks in terms of making sure, because sometimes you need a 100 pip stop. But if it's too much for you, you need to adjust. Either.
Well, what's the average ATR in pound kiwi? Do you know?
I don't know. I mean, I would say it's definitely shrunk over the years, though.
Okay.
Yeah.
I bet it's close to 100 pips.
I was gonna guess 200, but we've had these tight consolidation periods.
Right.
For longer, right? Like we get these moves, but we get a lot of this tightness. So 100 sounds about right, but I was gonna say 2 because this one can move. This one's already up 270 pips today.
So I like to say, Lydia, if you can't be wrong for a day, how can you be right for a week?
Oh, I love that quote. Yes.
So yeah, I think you have to be willing to risk a daily range to take a trade. Just my theory.
I don't disagree with that. I really don't disagree with that. The way I tackle that is trying to have the best entries I can have. So and everyone says you can't time the markets, but I always say in Forex, the better you can time, the better you'll do. So it's not like stocks. Stocks, you can't time the market in stocks, but your timing is not as
okay, that's the first Finkleyism I've heard. You're gonna start a list now, I think. Okay, I like it. So how about Guppy? Guppy looks like there's some.
Man.
Yeah.
I left my fib on because this trade just was spot on for me this week. It's the only thing I caught.
Beautiful.
And it came into, so I looked at this and I was okay, it gapped up. And then it came into the fib so nicely yesterday. This tail here, right here is where it got in. I positioned against the 50% fib. That's like my favorite setup is the 50 fib with a stop below the 61.8. That's just classic fib setup for me. Targeting the 123. I mean, it was classic. This is textbook setup. But the larger picture is, and looking for to get back in, because the larger picture on the pound is this break above 148. That has been, I think we've been waiting for that for months. And we've had these moves down, but we've just kept getting these kind of higher lows. And finally we got that resolution back in September, where we finally got a break above 148. It's the first break we've had all year above 148, almost in 2 years. Or I'm sorry, almost in a year, but definitely all of 2014 we were capped by 148. 2017 we were capped by 148. We got that break above in September. We got this retest. Got that retest lower at the beginning of the month, and we had
a shakeout move that was.
We have not looked back. So I love the setup this week. I mean, it was just fib perfect, right into the target. But
so, looking at your weekly, knowing what you just said about 50% and 61.8, I'm assuming that 59.44 is viable.
Yeah, 160 to me is where this thing is headed.
Okay, great look.
We can clear that last month's highs above 153. Yeah, I think 160 is a clear target long term. Definitely headed into the year end.
Okay. Any other crosses you want to cover? Have we covered them all?
Let's look at the CAD. I think the CAD has been very interesting given the interest rate hike surprises out of Canada, and the fact that we are at new highs, I think is interesting. It's speaking to this kind of dollar strength, or not dollar, this pound strength that is kind of has been much more clear against the crosses than it has been against the dollar, and even the euro. It's been struggling against those two major currencies, but the crosses have been a little bit more clear. And despite the Canadian dollar, I think a lot of folks expected us to be lower because of the interest rate hikes. And so I mean, I think that this one's just going to follow with the rest of the pound strength. I also think that the market might be feeling like interest rate hikes are now priced in and we're done. So for, it's another lesson, like once the fundamentals happen, it's not really tradable anymore. So if you're trying to short this thing or trying to figure out how to get short, you need to change your mindset and think, well, maybe there isn't any more interest rate hikes in the pipeline. And this might be the reason why we continue to rally. So I think the pound CAD is clear to go to 170. And this is kind of a smaller fib. But if we ignore this smaller fib really quickly, we have a lot of room to retrace. Again, we had that pound rally. Pound CAD, because of the interest rate hikes, this one has not managed to rally. And if you can think of maybe laggards in some of these pound CAD is certainly one.
Could play catch up.
Playing catch up and with plenty of room to go, not just in price until we get to the top of that rally, mid-year rally, but also in terms of momentum. I mean, we're right here. We're just got above 50. We're newly bullish on the weekly chart. So this thing really has a lot of room to run. So if you're looking for a good swing opportunity, this is probably one of the better ones, just because it's playing catch up. And then we'll see its breakout move like we're seeing in the Kiwi. But this one still has room to run. So if we look, this was our former high, and we're now retesting. You can see it. It's a little bit more difficult to see on this chart because we're right at the top of it. But if we look, and this is just the larger, this is the fib move on the daily chart. So my initial target would be 170.30 if I was playing off of these fibs. But knowing, you can take a little bit of profit here. We'll probably come up with resistance at this whole number like we've done, back in June at 170. But really, we're looking for 170 to definitely break. We have room to go. We've broken above the highs from September. We're retesting right now. So if you're looking for a place to get in, this is an opportunity. This is the hourly chart. So we're looking for a place to get in. You can even draw a fib on today's move to see if this thing has the potential to move lower. But I mean, quite honestly, this is looking like a great entry. Put your stop below 167.50. No buy, sell, or hold. But this is classic, like we've been saying all day, is just these breaks and these retests and how to catch these trends without chasing.
You're a natural teacher, Lyd. Really are. So I think, did we cover, someone's asking about pound Aussie. Did we, is that similar to CAD?
Similar to the Kiwi.
Yeah, okay.
Yeah, in terms of, so not as much, well, let's take a look at the weekly, but not as much catch up, I'd say. So we've broken above the 61.8, nice reversal signal. We're headed to 176. Again, the mid-year rally on that pound. Let's zoom in a bit. That's the weekly look. This too is coming back. Kind of, you can look at so this one is a little bit different. This one slammed into resistance. Let me see if I can check this out to a daily. So this one slams into resistance at 172, and we're falling back a bit. So not the kind of retest I'd like to see, right? We would like to see this break above 72 and then test and retest these former highs. So we can look like it might be coming into this high back from July. This one, I wouldn't try to catch on a retest because it's not as classic as a resistance break. It's actually,
it hasn't proven itself like the
right.
others.
That's it. It hasn't proven itself at all. So that one, we would definitely want to see that one come into the fibs a bit on a correction. Now, which means we may or may not get it, right? And it would be nicer to get a retest of this 170.10, 170.13 level. That has been where we've been seeing resistance. See it for the last couple of weeks. 170.10 has kind of been that line. If we could get a retest, I mean, we're 150 pips higher. That would be the retest level I'd like to see, unless we can get above 72, or again, draw that fib. But that fib, let's see, draw a fib over today's move. And
that's an interesting technique on, like, a breakout move to do fibs on it. Like a big, huge, kind of hurrah move that you just use that wave and measure fibs for intraday or maybe the next day for an entry.
Right, that's right. And that's really as long as it's valid. It's intraday to 24 hours. You just want to see if this thing will come in, if it corrects. So we're not trying to catch tops. So people will say, oh, this is a retest. Not really. It is testing these former highs. And if we see it turn around from here, okay, great. This wouldn't be where I wanted to catch it, just because, like you said, it hasn't proven itself. It didn't break resistance, but it did break this resistance at 170. So the retest, that would be a little bit more assured if we see it hold, come back into 170 and hold. And I think over the entire rally, that 170 level is a fib. So that would be more, and it seems like it's so far away. So don't chase. I would say go. We've seen other opportunities that are a little bit better. But this one is definitely keep your eye on 170 if we have a correction there. And for today, we're looking to see if it can break above or below 170, 150, just to see if it's really retested its former highs. But probably one of my least favorite for the day compared to some of the other things we've seen.
So you want to show your website and how people could reach you, Lydia, and what services you offer?
So I'm now an RIA, investment advisor, and our website just got redesigned. So check that out as it slowly comes up here. I still blog at faithmightfx.com. So you can check that blog here. This one here is the company blog. We're excited about this redesign. It's been 3 years in the making.
What's that picture of, that scene right there? Where is that?
This scene is the Pacific Coast, right around, that's in San Francisco, near beach.
Right,
so this is a private, no, it's okay. It's like a private beach. So we took this hike down and we had this whole beach to ourselves. You can't see it yet.
Cool.
But this is gorgeous. So for me, this is just like serene. This is really like finding your hidden treasure. It's actually called Pirates Cove.
I like that. Yeah.
Yeah. So
cool.
it became one of my favorite scenes. Went for my birthday a couple years back.
Okay.
Yeah. So yeah, check that out. I also do still mentor Forex students or students who are looking to do trading in addition to their investing, and that is more one-on-one type of mentoring. You can find that on the blog, faithmightfx.com. You can find more details about that.
How do you do that? In a chat? You do it in a chat room or over Skype?
Yes, we do it over Skype. We actually do Skype or Hangout, and we get to know each other. We get to know my style versus your style, and then I fill those holes. I fill those gaps. So for some traders, it's a complete learning experience. For other traders, it is somebody to bounce ideas off of.
It's a tune-up.
Tune-up, right?
Like you bring your car in for a tune-up.
I think we all know this, but a lot of newer traders don't realize that the most successful traders are not trading by themselves. They have somebody, they have people, which is why we all flourish on Twitter. That investing is not a sport that you should do alone. You really do want to have someone someone that you're trading with, or you can bounce ideas off of, whether it's a coach, a mentor, etc. So I offer some of these services now, and you can learn with Lydia to find out more about the mentoring and coaching or teaching classes. Investing with me is the RIA there, and this is you can find me.
So regarding the RIA, and last time we talked, you're still being patient, waiting for a pullback to commit fresh money to.
Right, and we're actually looking at individual stocks or individual investments. But as far as indices, we've been holding on to the indices. I think most have or should be. There's been no reason to sell, but yeah, like we said last time, it's just been difficult to put fresh money to work. So we're still patient with that. We've actually been looking at other opportunities instead. As we still, wait for this market to pull back.
discover gravity. Sir Isaac Newton is doing a headstand right now as he looks at the Dow chart.
We're all kind of floating right now.
It's like champagne. Someone put a picture of champagne bubbles bubbling to the top of the glass. So, Lydia, thank you for all your great looks again, and points and fib numbers and everything today. And besides all the great looks you provided today, your picture on Twitter, I like the new look, if I may say so. So, yeah. So
I need to update that one too. But thank you so much.
Yeah. So thank you for the looks, and you look beautiful. And I wish you and all the different arms of your business model to just keep growing like a mushroom, my trading warrior sister.
Thank you so much, Dale. Bless you. Thank you. Thank you.
Lydia.
Thank you, everyone.
Back at you. Lydia Idem Finkley, everybody. So we'll see everyone for tomorrow. Good hunting. See you in the other trading room for the CAD news. And remember, most of all, don't just count your pips, count your blessings. See all you warriors tomorrow. Adios. Thank you, Lydia.
Thank you.
You're welcome, Simon. You're welcome, Tom. She is very good, Kevin. I concur.